Welcome to today's session discussing inside the layers strategies for smarter and security fraud prevention. We're happy to bring a group of analysts here together to talk about this today. My name is Brad Cranford. I'm a director on the product team here at Alkami. I've been with Alkami for over 8 years now. I manage our teams related to our security and fraud integrations. And I'm happy to introduce you to Kevin Walsh.
Hi, everyone. Kevin Walsh. I'm Director of Risk and Analytics here at Mantle. Been with Mantle nearly 5 years, helping guide our institutions in building and maintaining their onboarding decisioning rules. Prior to joining Mantle, I worked in the digital banking field for over a decade, most recently working for a bank that used the Mantle products that we'll be talking about today. There, I was building out all of our account opening and transaction decisioning models.
Awesome. And Gil from ORNL. Gil, you want to introduce yourself?
Certainly. I'm Gilbert Young. I'm VP and Information Security Officer for the credit union. I'm involved in the credit union's information security and also into the fraud area wherever it takes a technical bent. I've been at the credit union for 11 years now, and before that, I was in the DoD contracting world, working in the aerospace industry. And I'm really happy to be here and looking forward to sharing with everyone.
Awesome. Thank you both. So for today's session, we're going to spend a little bit of time kind of talking about, um, you know, why layered security is no longer optional and kind of understanding the current, environment that we're working in. And then we'll dive deep into what does a modern layered security model look like. We'll spend some time kind of walking through that whole model, and then we'll end with some overall takeaways. For that, we'll end with some overall takeaways. Sorry. So to kick things off, I want to set the stage with kind of what we're facing. Digital banking threats are more advanced and more persistent than ever. Financial institutions aren't just up against, lone bad actors. We're dealing with organized, data-rich fraud operations that are adapting fast and really faster than our traditional defenses can respond. And so everyone's having to learn to be faster with more integrated solutions and, really evolved as well. So that's, dealing with things like synthetic identity fraud, credential stuffing, real-time phishing. Attackers are finding just different ways to get through any single point system. So it's important to have, a layered model that's real, that's integrated, and is adaptive. And that gives you, just more controls and more ability to respond as things change. But a layered defense doesn't just mean stacking tools. It means understanding how those tools interact across your entire digital environment, from the moment that they attempt to open an account to every login, transaction, and behavioral signal after that. So that's, it's a complex environment that we're dealing with. So, Kevin, I kind of want to start with you, kind of given that mindset of what we're looking at today. We know fraudsters have shifted much of their focus on the onboarding phase. There's a lot of risk in that phase, protecting that front door. What are some of the tactics you're seeing most often when it comes to account opening fraud today?
Yeah, today we classify onboarding fraud types into four real categories. You have your old school ID thefts, a legit identity is stolen, someone's impersonating that identity. You have synthetic ID fraud, starting with typically a real identity, adjusting components of that PII to create a fabricated identity. You have your first party account abuse. So the person is who they say they are. They're opening this account with bad intentions. And lastly, we're seeing a lot more mule fraud schemes today where you have what's seemingly a legitimate, high quality applicant, but they're being influenced by a third party behind the scenes. Ultimately, a sophisticated defense requires safeguards against all of these scenarios at onboarding, some of which are easier to catch up front, like your ID theft, synthetic ID, fraud types, where there's typically signals of concern when you're onboarding that customer. With first party scenarios, we do rely on your consumer reporting data sources to help identify bad actors with payment issues or deposit account usage issues. Lastly, those mule schemes, that frankly is one of the harder fraud types to catch at account opening. We'll talk more about how we do capture some signals at the front end, but this is the fraud type that it's really important to have that end-to-end layered security on your backend system to catch those signals.
Yeah, absolutely. That's good information. Gil, turning to RNL, what are some of the biggest fraud and security challenges you faced recently, and how did you respond? Lessons learned in the process, et cetera.
So just to piggyback on the layer conversation, I want to bring up a painful non-layered example service called checks. So checks, they're still widely in use. There's been the theory of the demise of checks because we have all these digital options, but checks are still out there. And in and of themselves, checks have no extra layers of security. So there's also been recent news stories about thefts and arrests, even right in our area, of postal workers who are stealing checks out of the mail, reselling them, scanning them in, putting them up on a marketplace, and basically fraudsters buying them and washing them or modifying them or duplicating them, and taking advantage of the members. Really survive, it's going to need to have extra layers. So we're looking at technology to try and validate payee or amounts in some fashion. And we're also looking at ways to promote the digital alternatives to checks. And that has been a big pain point for us recently because of that recent arrest. We've been wondering what's happening with our checks, and I think we found out. Um, but also, to piggyback on the digital side, fraudsters need accounts, and they do use stolen, fraudulent, and synthetic identities. In turn, of course, we counter with protections and controls using the tools and technology available to us. But then fraudsters, they sense that and they test the boundaries and they probe to learn what these new parameters or new protections that have been put in place are. And then they just adjust. And after they do an adjustment, they start to acquire fraudulent accounts again. So, in the process of learning and living this for a while now, considering an internal program where we sort of red team our services on a consistent basis and encourage others to do so as well. Take the time to think like a thief for a while, see how far you can get within your system, then acquire and build the layers and controls that you may need to defend against those weaknesses that we identify.
Oh, that's fantastic. The bad actors are constantly evolving and testing. They're trying, multiple points within the system. And as you pointed out, they're not just focused on digital, right? Like they're looking for they're omni-channel as well, right? We talk about our omni-channel solutions on our side, but the bad actors are omni-channel as well. So those are all important perspectives to keep in place. That makes a ton of sense. So as we dive deeper here, we're going to talk a little bit about these different layers. What does a layered approach really look like? Being intentional with defenses that you apply at every point in your digital journey, and we're going to talk a little bit about, how this all fits together. It's a defense strategy, but it's also a growth enabler. Right? If you have a secure experience, it's a trusted experience. And that's critical throughout every stage of the digital journey, and building that brand reputation and maintaining that reputation with your customers is something to keep in mind as we kind of go through each of these different phases. So let's talk about first pre-login before anyone ever gets into the application. This is where fraud can begin with, before a user ever accesses digital banking. Brand impersonation scams are often delivered through phishing, smishing, or fake websites that mimic your institution's brand. They get really good at mimicking you. These attacks are designed to trick users into handing over their credentials, and they can do serious damage to both your account holders and your institution's reputation. That's especially challenging if these attacks often happen, outside of your digital environment, which means your layered security model internally isn't just about what happens like inside, it's also about what's happening outside of that. You prepare to protect against those external threats. So Gil, this is this is a tough challenge talking about things that aren't even within your platform, right? Like things that are happening outside. How is ORNL approaching phishing protection today? And what strategies or tools have been most effective for helping you manage, that brand risk?
So you're spot on. The most difficult fraud to combat is when the fraudster interacts with the member, and it goes outside of any of our technical channels. So we don't have any indicators coming up. We have no sense of what may be going on. We're totally blind to it, and there's no way we can help the member. But in fact, there are certain things that we can do to sort of help the community, maybe not that specific member, but to try and educate them about these things. So there are the emails and the SMS launch phishing campaigns against members. They're pretty constant. So we try to be as proactive as possible. We utilize dark web searching for compromised credentials on member facing systems. We also use some beaconing protection on our digital banking system. We use a brand protection service for monitoring and taking down some sites that we find or they find because they also scour the web for us. We also promote the education via messaging, either via the application banners that we have or on our website. We also have an employee process because when these SMS campaigns come out, sometimes we hear about them, sometimes our members hear about them first, and sometimes our brand protection vendor hears about them. But we have an process in place to gather all the information from the member, whether they come into a branch or call into the call center, so that we can properly process a takedown of that site. We're also looking at technology to automate this so that our members can submit them via a website in some fashion. That process and technology to be determined at this point. And then finally, we're looking at new technology that will brand our outbound calls. So if we place a call, the typical fraudster, they'll place a call to the member and they'll say, hey, we're Ornell Fraud Department. We got some suspicious activity. We need to verify some info. And that's where the downfall starts right there. But we're looking at technology that'll brand our outbound calls. So if an outbound call is placed from our call center, it will be branded with our name at the top, our graphic logo in the middle, and also a department name down below, so that when the member sees that, they have more confidence that that phone call they're taking and picking up will actually be us. In addition to that, this service will also block from all the major telco vendors any type of spoofing that we've seen as well.
That's fantastic. So you've got a really robust program there, both educating your users, helping the community kind of understand and those risks as well, and then leveraging and looking at leveraging even more technology to help reinforce your brand and that trust within your customers. I think that's a great story you guys have to tell there. That's really impressive. So we'll move to the next phase from there, onboarding. This is a critical step, really the front door to your institution. This is where fraudsters are using synthetic identities, stolen credentials, spoofed information to try to get in and blend in as legitimate users. Once they're in, it becomes exponentially harder to detect and remove them without disrupting real members. So that's why your onboarding strategy is such a critical layer of defense, stopping fraud before it enters your ecosystem. Kevin, looking at this, we're emphasizing the layered decisioning rather than relying on a single identity risk vendor. Can you explain, how this layered approach works in practice and why it's critical to preventing fraud in the account opening stage?
Yeah. So to start, no matter what risk vendors may convey to you, there's no single vendor out there that can detect every threat that's posed to an institution at onboarding. Bad actors often know these risk solutions better than the institutions using them to fight fraud. They know what they're checking, they know their blind spots, and they're always adjusting their tactics to get through these checks. As such, it's key to deploy a multi layered approach to fill any coverage gaps that may be presented by any one data source you're using. In that way, you can layer attributes from each of these vendors' consortium databases to build a really comprehensive risk profile of the applicant and cover up any of those potential blind spots of a single vendor. And it's important to not only layer solutions across the different vectors of verification or fraud, so from your fraud checks to your CIP verification to qualification or first party fraud risk. We want to make sure we cover all of those aspects, but also inside of each of those aspects, we want to layer multiple solutions on top of each other, again, to cover up those blind spots. particularly when analyzing identity or fraud risk. By combining multiple best in class identity risk vendors, we can really build the foundation of a holistic risk profile of the applicant, and we can add friction where needed. Where we have a higher risk applicant and we're not as confident in their identity, we can step that person up, trigger document verification where necessary. But for your lower risk applicants, your existing customers that are more trusted members to your organization, we can run them through less friction, reduce costs on the onboarding. So it's very important to layer that onboarding and adjust the risk settings to what the risk is posed on each individual application.
Well, that's great. I think it's a great sign when we're able to be dynamic in how we apply these layers, right? And you're able to give a different experience for different users based upon that risk profile and all the different data that you guys have as you work through that. That's a great understanding there. Kevin, kind of digging into that a little bit further, Mantle's platform enables users to open accounts in under 5 minutes while reducing fraud. How do you strike the right balance between, that speed, opening accounts really quickly, and security during that account opening process?
Yeah, as I suggested, it's adjusting the risk parameters to the each applicant. So someone that is an existing customer where Mantle's connecting to your core, understanding what that relationship looks like, looking at the device that user's coming through on. Let's run them through a more streamlined set of checks where that onboarding is going to take a matter of seconds. We're going to pre-fill their data from your core. We're going to run some basic account takeover types of checks, but that should be a very seamless account opening process. Where we have a higher risk online applicant that you've never done business with before, let's run them through a few more verifications on the back end. And those should still all be automated. Those should still come back with a decision in a matter of seconds. But for the few that we need to step up, collect documentation, potentially manually review, let's add friction to the process for those higher risk users. So it's really just adapting to the risk of each application you're looking at and trying to maintain that automation, those back end checks as much as possible.
I mean, do you also see FIs kind of changing their risk profile there and sort of evolving that strategy within the platform?
100%. Your risk strategy, it needs to be a living, breathing organism, for lack of a better term. Ultimately, fraud vectors change. These folks, as I said, they know these risk systems sometimes better than an institution, and they're always changing their tactics. So we want to configure this risk workflow to your applicant pool, to your risk tolerance, and continue to make adjustments to those workflows to increase fraud capture rates where necessary, to increase automation rates where we can, to reduce some of the back end impact to your staff as well.
Yeah, I think that kind of leans into, none of this is ever, set it and forget it, right? Not only can your tool evolve to the individual user, but a financial institution needs to evolve kind of as things evolve internally for them, their understanding of the tools, the risks that they're having, and you guys can adjust to that. I think having that level of flexibility for everybody is really important. Kind of leaning into that, Gil, turning to back to ORNL here, as new fraud tactics emerge and evolve, the security checks that you have, that once work can quickly become outdated. You've kind of talked about this a little bit. How does ORNL approach reevaluating and tightening automated fraud controls, especially when that might mean adding new restrictions?
So, overall, my feeling on this is you have to adapt technology and AI to fight these modern day fraudsters. They operate much faster as they adapt more AI enabled tech to help them commit this fraud. And not being able to adjust risk in our system checks on the fly is in itself a risk. If you can imagine the processes that we have today, most of them they're semi-automated, but there's only one process in place. If that process breaks, or if a fraudster starts to take advantage of that process, we have to go into a manual mode And that entails user friction and internal labor, or going to a fully manual process slows down production and customer service. So we're trying to seek out and deploy the proper tools that would help us manage and recover from these issues and incidents in a more expedited manner. The only way really to do this is tools that use AI and other technology to fight these things. I see no other option really, and I actually embrace those tools because it would allow us to adapt on the fly and possibly not introduce as much user friction if we do come across an attack or an incident.
That makes a ton of sense. That's really good. Okay, so let's move to the login stage. As users go to actually log into digital banking and gain access to the rest of their account. Once that user's onboarded, this is the next stage for us. We must continue to evolve authentication technology with layered security policies that meet your institution's needs. From a technology point of view, this includes things like using and encouraging biometric authentication and more secure MFA methods. From a layered security policy perspective, FIs must evaluate which risk signals may impact your authentication workflow. Do you trust this user's device? Is this user showing signs of automation? What MFA methods are sufficient based upon this user's risk profile, to actually authenticate this user? Those are all, technology and process challenges you have to kind of evolve and continue to look at. Gil, looking at this problem, how is ORNL approaching MFA and authentication and balancing the security of the user and that user experience during authentication?
So, as we all know, these advanced phishing sites, they've developed to the point that initial fraudulent login and generation of authentication tokens, for example, they're not that hard to accomplish. They can generally do this with a well overlaid phishing site that can interact directly with the platform to a point where the member doesn't realize that they've just been scammed. Um, Problem is, we want to keep the customers happy and keep the friction to a minimum. So we try and reduce the friction by utilizing what you mentioned, some step-up authentication, some fraud detection tools that provide another factor of authentication for us, that the user is actually genuine and not a fraudster. So we utilize BioCats for their biometric detections based on previous logins that the member has done. That's a very powerful tool to be able to say this person is acting just like they did the last login, same swipes, same typing speeds. We also utilize AppGate for transactional and historical trends on the actions within the account. So both platforms provide good layers and capabilities to either shut down or limit access as necessary when something fraudulent is detected. We also have some banners with explicit wording to try and avoid the problem initially. Not to share the code with anyone is basically what they say. That's not bulletproof, obviously, because the fraudster can interact with the member and still get that information. So we still have instances where members share this with fraudsters posing as us. But bottom line is we put these fraud prevention rules in place. We request a step-up authentication if there's risky behavior. And then we can also drop people into a read-only mode or even just block access entirely, depending upon what we're seeing. And that's pretty much how we approach that problem.
No, that last part's pretty important. Obviously, you're seeing, a scenario there where everything that you can do to validate the user has passed, but there's still some risk to that user, and so you've got the ability to put them in, a package in our system, into a functionality set to limit their functionality to reduce the risk of what that user might do afterward. And so those are interesting combinations of the different uses of technology and policies for individual users to control them. So that's great. You've got to continue to enforce these layers even after they log in, right? So once they've logged in, kind of leading to what Gil just said, the work is not done. After they've been authenticated, there's still the ability to use the data that you've learned about the user from original on account opening through the login process, et cetera, to measure the risk moving forward. You're managing active sessions, repeated logins, high risk transactions, all of which are more opportunities for fraudsters to exploit. So the layered security model, really proves its value here with tools like real-time behavioral analytics, like Gil just mentioned, with tools like BioCatch, session monitoring, adaptive controls, transaction monitoring, like what AppGate's Detect TA solution adds. You can assess risk and take action without disrupting the user's experience for trusted users. So Gil, again, kind of building on this, how is RNL using those partnerships with BioCatch and AppGate to manage these types of risks? Monitoring the sessions, transactions, and other risky behavior in real time.
So we're able to use the tools that they provide basically to sense all those things that you were discussing, sensing the suspicious behavior, sensing that there's something off with the biometrics, and we basically apply those rules, and we're constantly adjusting them too. So depending upon what's happening in industry or in the latest news headline. We go in, we tweak those rules, and we adjust them based on the current conditions. So we had in the past had to tighten things down quite a bit, and that results in inconvenience for the members, but their accounts are safer. And in general, we've got the feeling from our members that they'd rather be slightly inconvenienced and safe than otherwise. So we basically use those tools, use those platforms to accomplish those goals, um, basing it on the current threat, what's happening in the industry, and what's going on specifically with us.
No, that makes a lot of sense. Your fraud posture is constantly evolving, right? As the environment evolves around you. So the ability to tighten down those restrictions or loosen them up depending upon what you're seeing, and able to adjust that is really important. These are all great examples of, kind of looking at this real-time monitoring, behavioral analytics, and protecting against everyday risk. But if we zoom out a little bit, because, what we're seeing isn't just isolated fraud attempts. The bad actors are not working in isolation. These are organized fraud rings, operating mule networks, that look and behave like real users. Money mule activities become another sophisticated threat in this space. These accounts are either, recruited or fabricated to move illicit funds across the system. They're helping fraudsters hide the source and destination of stolen money. The challenge is these accounts are, often appear legitimate. They pass onboarding, they show minimal engagement, and only become active, later once, the fraud is actually in motion. So looking at both ends of the life cycle, that front door, and ongoing activity monitoring, Kevin, kind of, lean into this a little bit, from your perspective at Mantle, are there signals during the onboarding phase that can help identify potential mule accounts early that you need to keep an eye on and, either, not allow in the system or, monitor later for potential future risk?
Yeah, as I suggested earlier, this is one of the toughest fraud trends to fully stop at the onboarding stage. But it is key to collect these signals to then utilize when you're decisioning that account later after it hits your core. Some things we can look at, some of those signals. One, where is that application being originated from? Mantel's collecting UTM marketing parameters. We know how that person got to your application? Do they come through a more trusted marketing paid source? Do they come through a back page link or what have you? So knowing how that application started, where that person came from to start that application is really important. Digging more into the eligibility of the member so we can check where does that person live? Are they eligible based on their location? If not, if they're claiming another eligibility criterion, can we dig into that? Can we verify that that person is actually eligible to open a membership? And do we need to collect documentation to prove that eligibility where necessary? In terms of the third party data sources, we can start to see a little bleed over from your first party fraud risk into this mule account type of risk. And by that, I mean, there might be information on those consumer reporting data sources to flag past behavior issues, or there might be signs of recent velocity of applications or consistency of identity elements on recent applications for this user that points to a signal that, hey, they've been opening a lot of accounts recently. They seem to be mixing and matching their information. There might be something of concern to that. And then finally, we were talking about BioCatch. Collecting device information at the onboarding stage is very important, not only to make that initial decision and block high risk devices, but also to pass that device information off to your digital banking platform to understand once that person's in your system, are they logging in from the same location? Are they logging in from the same devices? Or is there potentially a passing off of credentials that's happening? So there's a lot of factors we want to retain that account opening. So while we might not be able to stop all of them from hitting your core, we have that information to fight that fraud once they start transacting.
Yeah, that's a rich data set that we can continue to use and evolve throughout that user's lifetime with the financial institution. That's great. Gil, are you? I assume you're seeing signs of mule activity at ORNL, and so like how are tools like BioCatch and AppGate helping you flag and investigate suspicious behaviors that might otherwise go unnoticed?
Yeah, we definitely experience the mule accounts, and in regards to those mule accounts, the way the fraudster looks at it is typically an organization will allow you to open an account, but they'll hold back some features or limit certain activities until the account ages. And that's basically the getting to know the person, getting a little bit of trust that this is a real person and they're not meaning any harm. Fraudsters know this and they probe and test those limits. They even put the accounts that they have compromised on sale in Telegram channels, and they sometimes lay out the account capabilities. And obviously, the accounts that have a lot more capabilities go for more money. So that's how typically how the mule accounts get passed around. Some mule accounts they remain dormant during this time frame because they know that they're going to gain more capabilities with age. But we do use our fraud detection platforms to help us with that. AppGate and BioCatch, they can check the age on the account. They can check sudden changes in activity. And we can combine those lenses and turn them into a rule set and tune them so that fraud campaigns against us that we recognize, we can actually adjust for and start to get alerts on if we see that type of activity in an account. So defeating the mule account tactics, again, it requires a multi-layered approach. Um, Industry really has to work towards uniting the fraud indicators across services, channels, and platforms. Because I guarantee, and I've witnessed that fraudsters will utilize multiple channels to set up the commitment of one fraudulent act. We've seen a lot of innocuous activity and preparation for a fraud event after the fact. Fraudsters know that there are weaknesses and different protections applied to different services and channels, and they'll use each of those services and channels and exploit them to their advantage. So we really need to approach the fraud detection in the same manner. We need to watch for these activities across all the channels.
Yeah, it sounds like, you guys are able to put together a robust platform, and policies in place to manage that overall. It's important because as you've both said, they're just really complex scenarios. So, that kind of leads into the ongoing monitoring phase, right? Like we've kind of touched on the normal actions that a user would make as they get into a system, et cetera. But at the end of the day, all of those signals have to come together in one place to provide fraud management. As Gil was, kind of just leading up to. This is where institutions make real time decisions, triage alerts, and protect both users and the reputation of the financial institution. A strong fraud management strategy isn't just about all the technology. It's about the workflow, having the right teams, visibility, and decisioning tools in place to act quickly when something doesn't look right. And increasingly, it's about partnership, working with vendors to enrich your signals, automate what makes sense, and give your teams more time to focus on complex, high impact cases and evolving those strategies. Gil, how is ORNL approaching fraud management as a function? How do you bring together the people, tools, and partners to respond to those threats effectively and keep your members protected?
So, as you mentioned early on, the fraudsters, they're very organized. They're compartmentalized even to a point where certain business sections just deal with one aspect of fraud. They all work in concert, but they're again highly organized, highly coordinated, and in the same way fraudsters use the multiple channels and have great coordination. We've also enabled internal communication channels and systems to rapidly share fraud incidents, and have included most of our current siloed fraud areas in the company. So I refer to this as an omni-channel approach to fraud. We've also recently established a fraud department internally that will become our central fraud detection, monitoring, and coordination function. The concept being that indicators of fraud or confirmed fraud events can be monitored and detected holistically across the organization. So to start, some of the technologies we'll be utilizing in that area are obviously the BioCatch, the app gates. Um, we're deploying voice analysis technology in the call center to help us detect suspicious calls. Um, we're using the Visa card fraud services, and we're also using our deep and dark web searches. So there's other tech and other channels that will be adopted and added to into the new fraud department's tool set over time. But that will give us the ability to look at fraud against a member or in an account in a holistic manner.
Yeah, that's incredibly important. I think one thing we've continually heard is that, most institutions and technologies, fraud protection has, started in a very siloed manner, right? Like you mentioned check fraud earlier, and there will be whole departments dedicated to dealing with check fraud, ACH fraud, and, one area, et cetera. And so these fraud programs, individually are strong, but they tend to be siloed, and bridging that gap and getting them all both sharing information, and having visibility into actions that are crossing all those different areas is pretty significant. And in a lot of cases, we're hearing what you're describing there, Gil, where an organization's really needing to set up, a central team, to understand that and to, enhance that communication. So I think that's a really strong direction to go, and we're seeing more and more of that within the industry, to help break through, some of those silos. I do want to dig into one, sort of technology piece of this, Kevin. Account opening has, very traditionally in many implementations been its own silo, where there's not necessarily deep information outside of the account opening experience. And I think one thing that's really, unique and fun about Mantle is, Mantle's integration to a core, and able to, bring in additional data, right, beyond just what you're seeing of the user at the moment, but what the financial institution already knows about that user and their accounts, et cetera. How does your team approach verifying existing customers when opening new accounts, and how does that access to core data kind of help, enhance that experience?
Yeah. As with everything, the decisioning on an existing customer, it needs to be dynamic. It needs to react to where that person's coming from, needs to react to what that person's core profile makeup looks like. For example, where does that application originate from? Are they coming from more of a trusted SSO connection from your digital platform, or are they coming direct to your website to start a new application? Are they trying to change their email address on file as part of that application? These are all data points we need to consider when decisioning that applicant and making sure that this is our known user. This is the same person applying for a new account. And then looking at their core makeup. So we are connecting to your core during that application process, and we're pulling whatever information we need to pull to make an educated decision on that new application. So we know what accounts that person currently has, when those accounts were opened. So to Gil's point, if someone's opening accounts recently or has a high volume of recent account openings, we probably want to decision them a bit differently for this new account. We may want to get eyes on that, take a look, make sure we're comfortable with that user behavior because it goes outside of what you typically expect from your customers. We can also look at what account types they have. So, does this person have 5 different checking accounts that seems to be a bit odd of a behavior, and they're trying to open those in a rapid succession. So we want to layer those checks on the existing customer to make sure we're comfortable with them opening that new account. And then finally, if you have any warning flags, if you have previous charge-offs, if you have any indicators on your core that suggest person should not be eligible to open a new account or a certain new account type, we will be able to pull that information in, build that into your decisioning workflow, and ensure when an existing customer is opening a new share, a new membership, a new account, that you are fully comfortable with those actions and there's no presentation of risk or layering or that type of account takeover that we've seen throughout the years here.
Oh, that's great. I think that just provides a really, specific example of, breaking down those silo barriers, and providing more data so that those individual tools can make better decisions. This is a great example of how Mantle is using that data. And Gil, as you said, then organizationally breaking down those silos and providing the ability to share, knowledge and information, procedures, et cetera, across each of those is just really important to be able to manage that overall challenge. So we've dug through kind of each of these areas of a modern, layered fraud prevention solution. It's not just isolated tools or one-time decisions, but it's a connected, layered system for that full digital journey. This is how leading institutions are staying ahead of threats and continuing to deliver secure, seamless experiences to their users. And the institutions that are winning in this space aren't just investing in more technology. They're building smarter ecosystems, building smarter teams. They're integrating tools like identity verification, MFA, behavioral analytics, and fraud operations into one cohesive strategy. They're also focusing on agility. We've talked a lot about being flexible here, making sure that their fraud prevention approach can evolve as fast as the threats do, that you continue to test it yourselves and externally, because what works today might not be enough tomorrow. And finally, they're thinking holistically, looking beyond individual fraud events, focusing on how people are and processes and platforms work together to manage that risk across every stage of the journey. That's what it takes to move from being reactive to a truly proactive solution to build the kind of trust that keeps your users engaged, confident, protected, protects them, protects your brand, and helps your users grow and helps your institution grow together. So I think this is a good way of looking at these different layers and how they all fit together. I really appreciate Gil and Kevin, you guys helping kind of bring all this information together for us and provided some really good stories for us to help understand that. If you would like to learn more about any of our solutions, please respond to the poll now on your screen. We'd love to talk to you about our digital banking solutions, account opening, and positive pay, and how any of these tools can work with your overall layered fraud strategy, help improve your ability to secure your experience and your users, and protect your brand overall. So we'd be happy to talk to you. Please respond now, and we will reach out to you. As we close the session out today, we want to leave you with a few strategic takeaways that you can apply, right now and take back to your teams, thinking through your 2026, planning. So we're going to cover, each of these three recommendations. Gil, will you take the first recommendation and summarize the importance of having a connected and consolidated fraud strategy?
Certainly. So, as I was mentioning earlier, we're looking at consolidating our fraud strategy into a fraud group that's going to be focused on just that. In information security, it's always the visibility that wins the day. If you have visibility into the system, what's happening, uh, what kind of traffic is being passed, that's what we want to look for because that'll give us an indicator of what's going on information security side. Same for fraud. You want to have that visibility into all those systems. You want to see, what the member does from onboarding into actually getting into their account and using it. You want to measure those things. You want to sort of fingerprint the user for their protection to make sure that they're who they say they are. So you really need to have a consolidated approach to managing fraud and looking across all the channels at the same time. And again, fraud rarely happens just in one channel. There's usually indicators across several channels. And once you start to develop a program that looks into that visibility, you start to see those patterns. And once you can see those patterns early, you can effectively stop the fraud earlier.
That's great. And the second recommendation to layer your defenses at every step. Relying on a single signal leaves you vulnerable to changes in attacks, either changes in the technology or changes in processes. As we've talked about each of these layers, we've mentioned multiple tools and techniques that are used there. So having multiple signals at each step helps you evolve quickly because we know the bad actors will continue to evolve. Kevin, you want to close us out on protecting the front door?
Yeah. So ultimately, there is no silver bullet for fraud decisioning on the front end. In your onboarding rules, they need to be dynamic, but even more importantly, you need to layer this rich onboarding data into your other security level layers. You're paying for this data up front. You should be utilizing it not to just make that onboarding decision, but to help to flag those high risk behaviors and trends once the person is logging in, transacting, having interactions with your support team, making sure that we're adjusting those onboarding rules, but more importantly, making sure that end to end process includes that rich onboarding data that we're collecting.
That's great. Well, thank you both for this session. We've really enjoyed the conversation. I hope everyone was able to learn and kind of get some inspiration out of the conversation. And we appreciate everybody's participation. Thank you very much.